Well, health and fitness app Healthify has raised $20 million in fresh capital led by Khosla Ventures and Leapfrog Investments and closed its financing round at $45 million to one, accelerate its global expansion, two, enter the US market and advance its AI capabilities. Now, this takes Healthify's total primary equity raise to about $125 million so far. For more on this funding round, the expansion plans, let me welcome Tushar Vashisht, who is the co-founder and CEO of Healthify. Tushar, welcome to Startup Street. And now that you've closed this $45 million round with the fresh funding, tell us how exactly you're going to deploy this money to accelerate growth for the company.
Well, we're pretty excited, first of all, to get the confidence of some of the leading investors in the world to join us this round as well. Khosla Ventures is obviously one of the most prominent AI funds, and Claypond, which is Ranjan Pai's investment arm, is a prominent healthcare fund in India, and we're pretty excited to have them join us in the cap table. The primary use of the funds here this time is going to be to help us take Healthify global. Especially, we're excited about launching in the United States in the coming few months, and I think building the team, adapting the product is probably where most of the funds are going to go, besides continuing our AI innovation.
Well, speaking about the US market, Tushar, why the entry now? Of course, it's a large market, but what is the size of the opportunity for Healthify over there? And what kind of growth do you think this market will drive for your overall business versus, say, what you have in India?
So, Ritu, our mission has always been to put a health coach in every human being's pocket, right? And to become a global business. And the world's largest market is the United States, where our peers here are all doing in the hundreds of millions of dollars in top line. And the size of the opportunity is very large. What at Healthify we bring to the table is the world's highest outcomes to cost ratio, and a very AI-first approach to the product. Using our app, you can just take a photo to track your nutrition. You can speak to our AI coach, Ria, that has proven outcomes at scale of lakhs of people, hundreds of thousands of people. And we have this unique combination of AI and human coaching that really differentiates itself in a crowded market like the US. So, with very high outcomes to cost, a new AI-first approach, we think we're well poised to win in this large market. Your question on why now is intriguing, and the reason we've waited so far is because the cost to enter, cost to develop the product, etc., was pretty high. But all of that has changed with AI. Now with AI, we can adapt our app and our solution to the local market very rapidly. And so we're pretty excited to launch here in the US. I'm joining you from New York, but I'm pretty excited to launch here in the US in the next few months.
Well, let's talk financials then. Your India operations have achieved operational profitability, but what about PAT profitability, and especially now when you're looking to enter new markets where you'll probably be spending a lot to establish your presence? So what happens to PAT profitability?
Well, before the end of the fiscal year, Ritu, that's our mission. We achieved contribution margins positivity, I think, more than a year and a half ago. We've been, I think, now plus 30% and whatnot. EBITDA basis, any time now, and the idea is to actually get to cash flow positive, not even just PAT positive, before March end. And the team and I are pretty excited to achieve that milestone after more than a decade of doing business.
Okay, both cash positive and EBITDA positive. But if you could give us numbers as to what the top line, what the bottom line for FY25 could look like, and what the growth drivers for you this year are going to be.
I think the focus in the last 12 to 18 months has been to drive profitability. And not to optimize necessarily much on growth. Our business is going to be around 200 crores or so of top line, both FY24 and FY25, but it's going to be profitable. We don't know at what percentage levels fully yet, but definitely the expectation is to be in comfortable double digits there. FY26, however, is a year I'm excited about because we can get back our growth engines on once we achieve profitability. And in the long run, the idea is to continue to grow India market at about a 30 to 40% growth rate at a profitable level on the EBITDA side. Well, Healthify claims to have more than 40 million users on its app.
Just give us a sense of at what pace these numbers are growing, and what do you assess the total addressable market for you in India and in these global markets that you're looking to expand in could be? Give us some near-term targets.
Well, Ritu, our mission is to put a health coach in every human being's pocket, right? That is an opportunity of a few billion people. And we know and we want, a submission is to healthify a billion people, so actually transform a billion lives. The goal is pretty audacious, pretty large. And I do think before the end of the decade, we'll achieve it in every market. From a user base install perspective, yes, you're right. We have 40 million overall installs. But I do think that, the goal is to get to a billion before the end of the decade.
Well, Tushar, fitness goals tend to peak as the new year starts and resolutions get made. But since we're in the middle of this festive season with Diwali around the corner, are there specific trends you see in user engagement or business growth around this time?
Yes, it is festive period, and we do see customers indulge particularly in sugar and fat a lot during this week or two. And I think it's okay as well. I think one shouldn't overindulge, but it's okay to take a pause, from your usual regimen at times to fulfill other needs that people have. However, what we do see is a pretty strong resurgence in our business post Diwali and post New Year's. I think I don't know if it is people just feeling guilty of all of the extra splurging that we do during that time. I think it is more to do with the fact that there is a renewed consciousness around New Year's, and there is a renewed motivation around achieving, one's own fitness goals and not let life come in the way of stopping them. So, we do see a pretty strong resurgence in business for us after Diwali and after New Year's, and that's something that we're looking forward to this year as well.
Okay, on that note, Tushar, thank you very much for your time here, and we wish you all the very best for this festive season as well. Thank you.
Thank you, Ritu. You too. Wish you a happy and healthy Diwali.